Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to be here.
All right. So Starbucks shares are down pretty significantly this year, down over 25%. It hit an all-time high last July, so just about a year ago. Landon, they continue to raise prices, and I know this because I am a consumer of this product. They keep raising prices, but people don't seem to be pulling back on spending as far as Starbucks goes. They're closing some stores. Howard Schultz is back. Is a consumer still willing to pay these high prices with everything else up too?
Yeah, it seems to be. I mean, on the last report, same-store sales were up 7%. The average ticket was up 7%. So I think a lot of that came from menu price increases, and they have to. I mean, inflation is insane right now. Food services in general are up 13%, whereas food costs are up 10%. So you've got to pass that along to the customer. And it's not a surprise. If they were the only ones doing this, then, there would be backlash. But no matter where you go, if it's Starbucks or Dunkin' Donuts or whoever, it's just more expensive. That's just kind of the new reality that we all have to get used to. And what we're seeing, just based on people talking about Starbucks, how much they're using the app or they're going to the stores, it's all pretty strong numbers. Frankly, the app usage is up about 53% year over year, which is a very strong number. That's an important metric for them. And it kind of shows that there's some stickiness to it, right? Back in the days of COVID and lockdowns, the app was critical. You had to use it to get your order through the drive-through or through the pickup. But people like it, and so it's sticking around. It had a little bit of a run there, pulled back, and now it's coming back up plus 53%. Mentions are up 26%. And again, you talked about the just mentions of people going to Starbucks in general, I should say, is up about 26% year over year. You talked about the stock being off. It's almost down 30% from its all-time highs, right around there, trading at about 85 right now, where it was 120, as you said, just about a year ago. So what we're seeing is that the consumer has held on to this company, and you can see it's a pretty strong level of engagement with this company, that blue line there. It's actually increasing a little bit while the stock has just been plummeting. It's starting to turn around, possibly found a bottom there around 69 or 70. And so for us, I would say long-term, Starbucks looks strong. A lot of the trends are there's kind of trends that go both ways. You've got people concerned with the price of food, plus 230% year over year. This is a huge blow up. People talking about wanting demand for caffeine plus 16%, wanting better energies 11%. So these are all things that are kind of interesting for Starbucks. But to me, it just kind of comes back to what is their customer? Is this another Chipotle where, I'll paraphrase, but basically we don't have poor customers? That's kind of what he said, right? And Starbucks, I don't know a lot of people that are very, struggling a lot and going to Starbucks. So I think they have the ability. There's a little bit of inelasticity in that demand. I think they have the ability to raise prices and keep customers. On their last report, we saw that the memberships were up 17% to almost 27 million. So this company is resonating. It's got it's basically selling a legal drug. This and Altria are two home runs because they're selling a legal drug, and your customers are going to be loyal. So I think that the customers sticking around. Long term, I'd say we're bullish on Starbucks. Short term, I don't see any huge surprises to the upside coming out of this earnings report. I would lean more neutral than anything, but overall, the company health is pretty strong.
Landon, this is designated as a consumer discretionary, but if you're in Tom White and Jay Horn's world, it is a consumer staple. We all know that.
Yes.
But here's the thing, Landon. You already buried my lead because the comparisons on Starbucks to Chipotle, I think, are what investors should be looking at right now. The fact that, number one, their customers are more middle to affluent in terms of income that buy Starbucks. Not to mention their focus since Howard Schultz became CEO, online ordering, drive-through locations, eerily similar to what Chipotle is doing with their business as well. So when I look at these companies, they may not sell the same things, Landon, but don't you feel, and you've already kind of said it, the similarities between Chipotle and Starbucks are a key for investors to pay attention to here. But one last thing, margins going from 16% to 13% in the first quarter is a big deal. They got to get the margins back up to a reasonable level. Landon, your thoughts?
Yeah, I think there's a huge customer crossover between these two. I mean, I don't know their store location strategy, but I feel like a Chipotle next to a Starbucks would do very well. Both of them would just feed off of each other. But yeah, you're right. I mean, margins are critical. They have, I think, proven that their price the customer can afford to increase a little bit on the price. They're not going to drive customers away. So that has to be relieving to management and to investors. And now they just got to get those margins up, which, you're talking about efficiencies here with the app and online ordering and all that. That's going to drive margins. But I think the biggest margin increase is going to come from increasing the price. And I think it's there. I think that they can continue to increase price. I don't think the customers are going anywhere because they're seeing it everywhere. This is not a Starbucks isolated event. And I think that they will be able to get those margins back to where investors want to see them. Again, I think they're in a good spot long term. We've got the fall menus coming out in about 4 weeks. I think there's a lot of anticipation around that. We're going to watch very closely what the reaction to that is. But in the end, again, they're selling caffeine and they're doing it in a way that people absolutely love. And it's actually transitioned from really coffee to more cold drinks. I think on the last report they talked about that 80% of their sales were from cold drinks as opposed to hot drinks, which is incredible considering it's a coffee house. So they've just figured out a way to sell caffeine, sell sugar, and people love it. And again, long term, very bullish. I think they've got the pricing power to just creep up that price a little bit. Don't offend people with a quick move, but just slowly increase it, and they'll be fine.
Yeah, Landon, and they're closing stores in some of these cities, which is, I think, awesome. Schultz has come back in, the CEO, getting rid of stores where the workers don't feel safe. They've got some headwinds on unionizations. So when I look at your, your mentions count, it's stayed pretty stable over the last year, but the stock price has fallen relatively quickly, rebounded a little bit. But to Kevin's point here, it's all about margins at some point. Does the effect of Howard Schultz coming back in and kind of riding the ship make it so, because typically when I see divergences like that from your sentiment data on top to the stock price, eventually they've got to come back in line. Do you feel like maybe your data is the magnet that's going to drag that stock price up?
Yeah, I mean, we have no reason, there's no reason in our data to justify a decrease from 30% from all-time highs. Now, you could argue that the price was overstocked. I'm sorry, the stock was overpriced, and it was P/E ratio got a little out of hand, and it was just anticipating way too much growth. You could make that argument that it was too high, but if it was at all in line, then there's no reason it should have sold off to 30% based on our data alone. There's obviously all kinds of factors that go into this, but I would absolutely say that a lot of times we see divergence opportunities where LikeFolio data goes one way and the stock goes the other. In this case, LikeFolio data is pretty much holding strong, growing a little bit, but mostly holding strong while the stock sold off. So this could just be, throwing the baby out with the bathwater. This is the stock market crash, inflation, all these concerns. I think that is likely what led to this. Maybe a little bit of being overpriced, but not too much. And so with Schultz coming back in, if he can get those margins in line and demonstrate, again, continuing to demonstrate that there's pricing power that the consumer can handle, I do think that this is, you look back a year from now to this point, I do think that 85 could seem undervalued.
Yeah, and I know you guys don't cover a lot of the data over in China. They had a bunch of lockdowns, but they still opened a bunch more stores over the last 6 months in China. And that is one of their growth areas moving forward. So I have to watch it. Do you have an earnings score real quick, Landon?
Yeah, we're plus 12, which is leaning bullish, but not quite there yet. So for me, long term, I love it. If it happens to sell off, I think it's a great spot to pick up shares. But I'm not, pushing the chips in on calls or anything like that ahead of the earnings report.
All right, great stuff as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, the co-founder of LikeFolio, breaking down the data for us on Starbucks into earnings.